Next panel that we're bringing up is going to be introduced with a short presentation from somebody that I like to think of as a Renaissance man. He is a Renaissance man in the classic sense that he speaks 5 languages. He studied the law, but he went beyond that to become a modern Renaissance man. He got deep into the world of banking, and then he took on technology. Has gotten right into the world of technology, finance. Of course, that is all about fintech. He is now the fintech and RegTech lead for Hong Kong and China and liaison to the United States for PwC. He has over 300,000 followers on LinkedIn. His video on fintech on TEDx is the most watched fintech video in that system with over 70,000 views. Ladies and gentlemen, say in as many languages as you want, welcome, bonjour, to Henri Arslanian.
Thank you, Andrew.
Go get him, brother.
Thank you, thank you. Guys, best MC in town. Guys, very excited to be here today for the launch of the Hong Kong Fintech Week. As Andrew mentioned, my name is Henri Arslanian, and really my passion is the future of the financial services and legal industries. And I'm just very lucky I get paid from PwC for doing this. What I want to do over the next 5 minutes, because that's the time I have this morning, is really to share with you some of the latest best practices we are seeing in the ICO space. Really when it comes to token sales, and really my goal is to share with you some of this latest content that we are seeing, really with the goal to empower you, whether you're an entrepreneur looking at doing your own ICO, whether you're an investor looking at investing in the space, or whether you're just a stakeholder interested in the topic. Can I just have my slides on, please? So what I'll kick off is really, as you guys have been aware, the one thing I'll just give you guys as a quickly, as an overview, the first thing that I tell every audience is that anybody tells you that they are a fintech expert, you have to run away. I can tell you honestly, I spend 24/7 of my time in this field, and I have absolutely no idea what's going to happen 6 months from now. When I look at the crypto space, and I can tell you honestly, when it comes to token sales and the broader crypto space, I have absolutely no idea what's going to happen 1 month from now. And the main reason for this is actually, I always say the crypto space is like dog years. A week in the space is like 7 weeks in the normal world. And this is why it's extremely difficult for all of us to catch up and really keep up on top of the latest developments. Unfortunately, I don't have my slides, so you need to follow up. It'll be more of a TEDx style from what I'm seeing. But a couple of things on this point. So if you look over the last couple of months, the ICO space and the cryptocurrency space has really taken off. There's more than $170 billion in market cap in the space. Now there's more than 1,200 tokens across the broader spectrum. Over the last 2 quarters, there was more money raised via ICOs than via venture capital route. And if you look at the slides that I don't have right now, there's actually the number of startups, the number of ICOs every month is keeping to increasing. But the question that always comes up, to what actually is making an ICO success? Is it the use case? Is it the team? Is it the problem they're solving? Pretty much all of them. But really one factor we are seeing right now that is really being a big game changer is actually implementation of best practices in the space. And there's a whole suite of best practices that we are seeing in the market, really from employment agreements. Here we go. Fantastic. Sorry for that. Perfect. Is really the institutional, the best practice we're seeing. There's a whole suite of best practices that we are seeing right now in the industry. But really one of them, by the way, we're having a workshop on this today at 3:50 with a lot of my colleagues if you're interested here. But really the ones I want to focus on are 4 areas. KYC, the legal field, governance, and tax. Let's start with the most basic one, KYC and AML. I can tell you, remember, this is dog years. We spoke 6 months ago, very few ICOs were even bothering doing KYC. Today, the landscape has completely changed. All the institutional ICOs that you'll see are having a KYC framework in place. At a minimum, basically to know where the investors are coming from. As you guys know, most of them today are actually blocking the ICOs to actually Chinese investors. Some of them are doing it for US investors. We're having ICOs actually put in place sanctionless monitoring from an AML perspective, and put in place risk-based frameworks to ensure that actually the people that are their token holders are actually compliant from that perspective. Another big area has been tax. Some of the ICOs you see that took place 6 months ago had zero tax consideration before they actually did their token sale. This is a problem if you're an entrepreneur and you are raising $20 million and you have a roadmap of how you're going to spend that money, and you just realize you have to pay tax on it, anywhere from 15 to up to 40%, depending on the jurisdiction you're in. It's been a problem for many. And which is really interesting is we've seen really now a lot of these ICOs before doing their token sale, for the benefit often of their token holders, really get tax advice on how it will be structured. Not only on the issuing entity and how those revenues will be recognized in actually over the next coming years, but also from a transfer pricing perspective. A lot of the ICOs, as you may know, have a lot of related entity transactions and how to look at this on a holistic perspective. Or for the entrepreneurs themselves. All these ICOs will generally have a portion given to the founding team. There's a lot of actually tax oversight on that as well. Another one is obviously, without any doubt, the legal and regulatory field. You all heard about it in the press. There's a lot of actually regulatory enforcement and news around the topic. And really this has been actually a boom for law firms, is really the legal work that is being done right now by all ICOs. Often from a regulatory perspective, whether the token you're issuing is a security or it's not, but also on the various legal documentation that take place. From all the token sale documentation to the intellectual property documentation, even the employment agreements of the staff. And this is one thing we have seen right now is pretty much a lot of the law firms really start focusing and have teams to really look on this topic. I know a lot of taking pictures. If you're interested in the slides, come and let me know. I'm happy to share them with you. And probably one of the biggest areas now of focus has been governance. For those of you following the news around ICOs, you have seen one of the big ICOs in the US that raised more than $230 million, now worth more than $400 million, is going to serious governance issues right now. In the normal world, if you and I would set up a business, we would look at raising $20, $30, $40 million. For sure, we would have a governance framework. And it's actually, this is why we are now seeing in the ICO world as well, people come up with proper governance frameworks. Not only how the proceeds will be used, but also the level of transparency that will be given. To also even more basic stuff, the media policy, who's allowed to speak to the press, or actually the disclosure of conflicts of interest. And we'll talk about that in a second in the panel. And this is really becoming quite an important topic because even a lot of investors are looking at the space as well. We recently came up with actually a tool for investors on how to look at ICO when you're investing in it, a kind of a framework. But also the question is often, what is the goal? When we work with actually ICO entrepreneurs, often the question is, what are they really looking for? And what you realize, we all hear about in the press about those scams, and all the guys are trying to make a quick buck out of the situation. But a lot of the entrepreneurs really genuinely want to build an institutional business. They have a vision and they want to change something and they want to be best in class. But really, what I'm afraid about is actually, from all the ICO world, I'm actually worried about bad apples. You all see in the press, there's obviously a lot of folks who are just trying to take advantage of the situation. And the biggest risk, I believe, in the broader cryptocurrency space, and especially the ICO space, is really some of the bad apples and people not taking the basic precautions. And the question is, how do we deal with this? How do we make sure this does not become a big problem? There's many ways of looking at it. Should we set up new regulations? Should we regulate the space? If I talk to you about regulations, this is the reaction most of you will have. Should we have actually proper new policies in place? Like I mentioned before, the space is moving so quickly that it's very, very difficult to come up with actually policy without hindering the growth of the industry. Or should we have the ecosystem come together and try to do some kind of self-governance? I personally believe the last option is probably the way to go, and there's a number of initiatives going on right now around the world, not only in Hong Kong, but also at the global level. But this is one of the big debates I think we have to have. And actually, I'm very happy to say this is what the panel that we're going to have right now will be focusing on about. Thank you very much. I'll be here all week, so for those of you interested, come and see me. We'll be around. Thank you very much.
All right, Henri, you can take a seat for a couple of minutes while I set up the panel. We're going to introduce first our moderator for the panel, Brian Tang, who's a corporate finance lawyer. Come on up when I call your name, guys. The Asia Capital Markets Institute was his creation, his baby. He's been bringing together professionals from across Asia to help them to think about things like standards issues we're discussing today, to help them professionalize, to educate. And Brian was the first person to really bring that together. So we do appreciate it, and thank you for joining us here today, Brian. I'd like to also introduce Mr. Nick Cowan. He had an extraordinary career in banking at one point at ING Barings, 2,500 employees, $1 billion of revenue every year. Nick, good to have you out here. And then he went on to do something completely different. He is guaranteed the only person I've ever met that is the founder of a stock exchange, right? The founder and CEO of the Gibraltar Stock Exchange, which just got its license the last couple of years and is doing amazing things in the blockchain space we're going to get into. And all the way from New York City, from Davis Polk, we have Reuben Grinberg, as seen on TV, Bloomberg, CNBC. He's a regular because he gets this stuff. He's a lawyer now, but he also programmed the trading software for Bridgewater Associates, one of the biggest hedge funds in the world. So lawyer and programmer, this is the Renaissance team, ladies and gentlemen, your panel. Go get them. Thank you.
So it's an honor to be here this morning. We're only a few minutes late, right? You know, this area of ICOs really is the intersection where people say we're not just disrupting Wall Street, we're disrupting Silicon Valley as well. So maybe let me start off with the audience. So who has actually been approached, at least, to buy or participate in an ICO in the last year or so? Yeah, a few out there. So really, the evolution of ICOs and the regulatory focus of all of this, I think, could be said to have started most recently with the SEC's investigatory report into the Dow that was published in July. As Henri said, you know, I moderate a panel there, and since then, so much has changed, right? This area changes so quickly. Since then, after the SEC confirmed that yes, cybersecurities could be securities themselves, the CFTC and other regulators around the world have followed suit to say yes, they may well be securities, and CFTC has said yes, they may well be commodities. So Reuben, you know, coming out from New York, most of us outside of the US, the simple answer is, okay, right, we're just not gonna submit into the US. And frankly, every day these days, everyone is a Howey expert, right? Everybody knows the 4 steps, everybody has their own views. So maybe if you could please share with us, you know, why should we care whether something is a security or not? You know, and I think it's a great analogy. Of course, the US laws are different, but other jurisdictions follow suit, and it gives guidance to why people should focus on this, given that there's so many players in the space now. So maybe you should shed a bit of light. I think there are 4 main areas. Firstly, in relation to licensing. Secondly, marketing solicitation. Thirdly, reselling. And fourthly, liability. So why should we care?
Sure. So if something is a security in the United States, it's illegal to do an unregistered public offering. So typically, if you want to sell securities publicly, you have to register it with the SEC, and those are known as IPOs. And it's a process that can take a good amount of time. There's a lot of back and forth with the the SEC, and it can take, you know, a year or more. Sometimes the SEC never qualifies a registration statement just because they have a lot of questions. The vast majority of disclosures that I've seen for ICOs, the white papers, they would not pass muster with the SEC. The standards are very, very different. As an aside, even for private placements that are securities, even there, the vast majority of ICO disclosures wouldn't meet the muster of what's typical in the United States securities market. But even more important, okay, so let's say that you want to say, I'm going to treat this as a security. Let's do that in the United States. Let's say that, you know what, waiting a year, it's going to take too much time, and adding the public market isn't going to necessarily add that much capital. Instead, I'm going to focus on VC investors or institutional investors. So I'm going to do private placements. The problem there is the following. It's you can only have these things trade on national securities exchanges. If it's a private placement, you generally can't have it trade on an exchange. There's no exchange that exists that can trade these tokens right now.
These are so-called securities tokens,
That's
right?
that's right.
As
That's
opposed
right.
to the utility
That's right.
tokens.
There are significant transfer restrictions. So if you buy one of these things, you can't do anything with it. And I think the biggest problem is that most of these tokens that are sold in ICOs, they're meant to be used as utility tokens. You want to be able to sort of use it on a blockchain. And no, I haven't seen any real analysis that it just works. There's a fundamental incompatibility with a token that can be used on a blockchain and the securities laws. As soon as you do anything, you run the risk of falling in the definition of a broker-dealer, of a transfer agent, of a clearing agency, and violating the transfer restrictions. It's not impossible that someone will figure out a way to make this work, and the SEC has been open to receiving comment to potentially changing its definitions, but so far people have been seeing the root of saying, no, my token's not a security, and so that's much easier. No one's done the hard work of saying, let's figure out how to make this work under the securities laws.
Well, there are some initiatives around the so-called SAF model, right? So one of the largest, if not the largest ICO in the world was by Filecoin, and they used a SAF model, SAF meaning Simple Agreement for Future Tokens. They raised $257 million, including a $52 million advisor round, only from accredited investors. So maybe you can share with us a little bit, the rationale behind that and how it works and how that's being used.
Sure. So it's a pretty innovative idea. The assumption is that most tokens that would be sold before the launch of a network would be considered a security. The problem is that if it's a security at one point, most likely it'll be a security later on. There are probably good arguments that that's not the case, but no one's figured it out. It might be years before anyone figures out that mess. So instead, the idea is let's prevent the security status from infecting the token itself. Let's create a separate agreement called the Simple Agreement for Future Tokens, where a venture capital investor or institutional investor will enter into an agreement. It's acknowledged that it's a security, and what we're going to do is I'll pay you money now. When your network launches in 6 months or a year, then I get tokens, and the hope is that at that point, those tokens are not going to be securities, even though the agreement that I'm entering into with right now is a security. It's sort of to prevent this idea of securities contagion.
And to what, so if you think about it, what is being sold initially, the investment contract, is a security, but what is underlying it would not be a security
right.
when the product actually comes.
That's right. So the main law firm that's pushing this, they've put out a white paper, and they have sort of discussed the idea that if the network has launched already, when the token comes out under the Howey test, it should not be considered a security. I think the weight of opinion among law firms that I know of is that that's not an accurate statement of law. It's not something the SEC would likely go along with. It's an interesting advocacy position. It might be something that, after a lot of back and forth and rulemaking, the SEC might be willing to consider. But right now, it's not something that anyone should rely on.
Right. So again, these are, that's Cooley you're referring to, and
that's
I think
right.
Wilson Sonsini has come out recently. So these are the West Coast firms have formed those views. So sorry,
Yeah,
we're geeking out on the legal stuff right
although
now.
the main attorney at Cooley, I know him very well. He's a very smart guy. He's based out of New York.
Yeah.
Yes, that's true. So thanks for that color, because this I think helps the rest of the world understand why regulators are concerned about and how regulators are, and the industry, frankly, is reacting to this. Now, turning over to the broader issue of governance, and we're so lucky to have Henri set the scene for all of us. So Henri, as you know, and Bart even more colorfully setting the scene for all of us, this space is rife with fair degree of controversy, it's fair to say. Yep. The consumer protection concerns, pump and dump, right? You've got scam coins, you've got Ponzi schemes, and then you've got policy considerations as well, like money laundering, avoidance of currency controls, and then hacking as well. So, and then now in the news, for those that are following, we have the Pesos debacle, right? So Pesos is the second largest ICO raising. They raised $232 million worth of Bitcoin and Ether, and based on the price that has gone up since then, it's arguably worth $400 million now, yep. Right? So it was structured as a Swiss foundation. But recently they announced that the alpha has been delayed. The founders are trying to replace the foundation head, who is a crypto founder, Valley founder, so they're very well regarded. And the IP has not been transferred to the foundation. So, and this is one of the biggest deals there, right? So can you shed light for us? I mean, what are the lessons to be learned from this? Yeah. Especially you talked about the bad apples. This is one of the big apples.
Yeah, I mean, first of all, I don't know if it's going to be bad apple, but it's a big controversy right now for any of you following the news around ICOs. It's called Tesos. It's out of Switzerland. I think two first comments on this. First of all, I'm a big believer this may be the ICO that really changes the game. It may do what long-term capital management did to the hedge fund industry in '98, what Lehman Brothers did to the banking industry in 2008. This scandal may be one of the big game changers in the broader ICO space. A couple things as well, I guess. This ICO happened, first of all, in June or July of last summer, which in crypto world is an eternity. For example, these guys had no cap on the amount of money they raised, which today, if you do an ICO with no cap, it'll be challenged quite a bit. Second is they actually use the foundation model. I can tell you from the number of ICOs we work on, the dozen or so we're actively involved in right now, I have less than 20% that are actually foundations. And I can tell you honestly, when you're doing the governance around the foundation, it's extremely, extremely complex. There's many, many phases, and actually we'll talk about it this afternoon, but it's actually quite a complex process from that perspective. In that case, I always said the Tesos ICO is made for a movie plot. There's a couple founders, there's actually high-profile individuals. There's so many elements that can make a movie out of it. But if you think about some of the basic stuff, the IP rights, there was no governance around that at the beginning. The names, the transparency. In that case, there was a very high-profile VC investor from the US who now apparently was not involved when the ICO happened, but the name was used. Transparency. There was a lot of fee discounts that were given that were not disclosed. You had so many of these items, like the use of funds. How were the funds going to be used there was no governance around that. To even points like more broader transparency and elements like these. All the elements we look at when we look at the governance, I don't know if in this case they had no time or they overlooked them, but let's put it this way, if it was a normal business, people would have actually spent some time looking at it. I'm actually a big believer this will be a game changer, and I think the lesson for this, for everybody is, especially for the entrepreneurs, this may be actually one of the game changers, if you want, from that perspective. There's a lot of actions now. People are saying, are regulators going to come after them? I heard people want to do class action in the US, which I'm not sure how legally that would be worked with all the disclaimers. But I think there's a lot. This will be one of the ICOs that will go down probably in the young history of ICOs as potentially a game changer.
Thanks, Henri. But talking about young history, now, because it's so unregulated, more regulators coming in and more regulated entities are coming in, and this is a great segue to Nick. Nick, one of your wonderful, interesting initiatives now is to actually introduce a blockchain. So you're from the Gibraltar Stock Exchange. So it's a stock exchange that wants to introduce a blockchain exchange board. As I understand it, one for utility tokens and then one for security tokens. Could you please shed some light in terms of how you're thinking about it and trying to address some of the needs in the space?
Sure. It's interesting. We're only an hour and a half into the week, and already you're hearing disclosure, governance, action, change, bad apples, and all these sort of buzzwords. And I was particularly interested in some of the things Bart was saying. There is a need for action, and how are we going to implement change? And our regulator is almost as cool as Bart. So almost, but not quite. But let me tell you what Gibraltar is doing. First of all, at the national level, what Gibraltar is doing is in January, we implement our new regulations, DLT regs. It's the first jurisdiction in the world. And as part of that change, the National Stock Exchange, we want to implement a couple of things. First of all, what Reuben said, utility tokens, we're launching the Gibraltar Blockchain Exchange, which will launch in December. And there's a lot of similarities to our main market. It is a rules-based system where sponsors can join the exchange. Sponsors can sponsor an ICO based on rules driven by the community. And basically, utility tokens have a safe harbor, a crypto harbor in Gibraltar, where it is a national licensed exchange offering certainty and surety with regards to rules. So as an issuer, what do you get? Well, you get a kite mark and you get access to a KYC AML pool of investors. As a sponsor, you get to basically be able to increase disclosure and transparency and certainty and investor protection. And as investors, well, you get exposure to a utility token that effectively has a kite mark. And those, I think, are really important drivers for us. So the things that Henri was talking about in terms of governance, they're absolutely vital. And it's what we do for a living every day. And then in 2018, we want to move into the main market, where we'll basically have securitized tokens. So if you're a utility, come to the GBX. And if you're a securitized token, come to GSX. So we're honored to be here. But equally, we want to invite people here to participate in what we think is a really exciting revolution. So thank you.
Yeah, thanks so much, Nick. So, I used to joke about 3 or 4 years ago, if I were in a circle of people from fintech, there are relatively few lawyers, right? So now I'm in a panel with a white shoe law firm, a big four, and a stock exchange, right? So you know there's real money in this now. But can't you argue also that therefore the fees are going to go up, right? So the anecdotal ICO, two guys in the, and they're mainly guys, in a basement typing out a white paper and shooting it out, and then see who's going to come in, right? So now with all of these standards, which I think are critical for those that believe that this is a good market to grow, I mean, what's the cost going to be for some of the issuers in an exchange such as yours?
Well, I think at the moment that's the issue. There's uncertainty. Yeah. So you can, I mean, tomorrow I could launch my own ICO consultancy. I could tell you all that I know everything about ICOs. I could have unlimited costs. I could charge you 10%. There's no guarantee whether the ICO meets the technology audits. There's a lot of question marks over the challenges, and investors could end up getting scammed, and we've heard about that. So in my view, I think what happens is when you create a marketplace where you have a collective pool of high-quality lawyers, high-quality accountants, high-quality service providers, etc. I'm not saying the costs become commoditized, but you end up with efficiencies of economy.
Absolutely. So in the US, there are other interesting initiatives along those lines too. So Overstock has now announced the launch of T0. So T0 is going to be a ATS, an automated trading system. Think dark pools, previously used, but now specifically for the token space. I wonder whether you could discuss that a little bit, Reuben, and both of you as well, Nick, in relation to the other initiative in this space, which is the decentralized crypto exchanges. So previously you've got centralized crypto exchanges which may not be regulated, but now you've got decentralized ones, quite a few ICOs in that space as well, and how that comes in the mix.
So T0 is pretty interesting. There's a press release. I haven't found that much other information. There's not that much that's public. Money 2020 is a conference that's happening in the United States right now. I think they're set to make some announcements there, so there might be some more details that come out. From what my guess is, the focus there is going to be on tokens that are doing the same thing as security. So a representation of equity or debt in a company or something like that, but in token form. And that seems fine. It's not crazy. It's just, let's make it a little bit more efficient. What I don't think is going to be able to happen on that platform, at least in the near term, is utility tokens, because I just don't think it works under U.S. laws. I don't think anyone has thought that through. But nevertheless, I think it is likely that what they're trying to do is beat the existing U.S. national securities exchanges to the punch of using blockchain technology. And a lot of them are focusing on this area. The New York Stock Exchange, NASDAQ, all have their little sort of private pet projects in that area.
And as does Hong Kong, to be honest,
right.
The Hong Kong Stock Exchange.
Yeah, I think what we've tried to do is to look at the challenge with decentralization is currently there are no best practices, right. and they don't exist. So I think from our perspective, rather boringly, we think the evolution is first centralized exchange, where you can have governance and best practices which uphold the standards globally, but decentralization is probably the future. So we think probably 18 months to 2 years out, we'll need to migrate to a decentralized structure, and hopefully by then, I say hopefully, probably nobody in the room agrees with me, hopefully by then regulators have caught up, and there are best practices and global standards on disclosure and transparency and investor protection and all the things which keep us awake at night. So decentralization is the future, but I don't think the technology or the best practices are currently in place to support either securitized tokens or utility tokens. I just don't think it's there yet.
I love that the future is 18 to 24 months from now. That's how fast
used to be 20 years.
Exactly.
That's a few lifetimes, literally, right?
Decentralized exchanges are kind of interesting. I think they're going to pose a large challenge to regulators and to law enforcement, because if you look at a lot of the actions around the world, for example, the BTCE was a European exchange that got shut down. It's those exchanges are the ways that law enforcement, both the United States and other countries, end up cracking down. And if you have a decentralized exchange, it can be quite difficult. And so I'm not quite sure what's going to happen. That'll be very interesting.
So every day, just today, somebody sent me something from London. So there are lots of self-regulatory initiatives here because of this issue. And so to end the session, I want to do a kind of a quick fire round of questions to everybody. This is in spirit of following up with Bart's challenge. Kind of 2 sentences from each of you regarding certain elements of best practices in the marketplace. maybe we'll just start, we'll go this way, relatively quickly, okay? So firstly, biggest risk faced by issuers?
I think they're going to get sued up the wazoo.
Henry?
I would say it's the other bad apples who may contaminate them indirectly.
Nick?
I'm with Reuben, they go to jail.
Biggest risk to purchasers and investors?
They get fleeced.
Yeah, not doing DD.
Just a waste of money.
So project stage that should be going to ICO, you know, pre-product or anything goes?
I think anything goes as long as you're comfortable with the risks.
Yeah.
My sense is, you know, have an alpha at least. Otherwise, what you're doing is setting yourself up for failure. You're going to have so much regulatory risk that there's just no possible way that you can even comprehend the amount of regulatory risk. You're just rolling the dice on an idea and a company that could have actually had real legs, and you might be undercutting yourself.
Yeah, I kind of called this, previously we had Kickstarter, which is crowdfunding for hardware, now it's crowdfunding for software, right? So Henry, I meant post-product.
Yeah, I would say at the MVP level, actually, not because of best practice, for actually regulatory reasons in the US, actually mainly driven. We're having a token that is out before the MVP utility being built.
Right.
I think there's a balance here between investor beware, putting the risks that are properly disclosed, and that may be appropriate to not actually target the US at all or other jurisdictions. So to come to market, you've got to have a load of legal opinions in different jurisdictions to make sure that you're categorized in the right category, and it fits all those things. So investor beware as well, though. Market should decide.
Access, so accredited investors or retail as well?
It's a tough one. I think probably accredited investors is where I would see things going. Again, I think the challenge in today's industry is my fictional investor, Mrs. Miggins, doesn't really know what she's buying and selling. And unless she understands how to read a white paper, which she might not, you're asking for trouble.
I think it's going to go for both. For one reason, the utility does not work if you only have professional investors who are not going to be using it.
Right.
Let me turn the question a little bit. I think whether you're a accredited investor or a retail investor today, there's just zero information in these white papers that lets you make decisions about. I mean, I read these things, and I am a native speaker and reader of the English language, and I said, I've just read 20 pages of gibberish. I don't understand. It's just buzzwords.
That's
so
unnatural.
how are you supposed to make an investment decision based on that?
Right.
Governance.
Right. I used to draft prospectuses, right? And I read these, they're interesting reads. So next, disclosure. Should there be minimum standards for disclosure?
I think that people should realize that they already exist, but so there are existing rules in the United States, and whether you're a security or not, there are similar standards under both the CFTC's rules and the SEC's rules, and this is a fairly new development that the CFTC has expanded powers for sort of non-security tokens, and the similar standards apply. If you make any material misstatements or material omissions, you can get sued by the agency, and there's also private rights of action, so your investors can sue you, and I think that you're likely to see class actions and other lawsuits in the United States on a lot of ICOs that don't have good returns.
I would agree, but on a different way. I think it's really going to be the driver will be the market. Where as somebody who wants to purchase a token, unless there's enough disclosure, you're simply not going to invest. So the market actually will determine the level of disclosure that is done.
Listen, we're an EU national regulated exchange, so we live in an absolute directive-heavy world where the prospectus directive is probably one of the most robust directives in the world, and the disclosures that you have to put in there are almost borderline over the top. So we've taken a lot of that position, and again, it's basically just, does the investor have the information the investor needs to make an informed decision? And that's the problem with the white papers. I'm not as clever as Reuben, but I tell you what, I cannot get past page 2 when I'm used to basically just, this is the business, this is what we do, here are the risks, and should I buy or sell? Yeah. And with the white papers today, that governance and disclosure is, in many cases, invisible.
That's while you're in the EU, right?
Yeah.
That's why we're in the EU.
Right.
But that's also the great opportunity,
Yes.
because we don't have to wait for the EU to take 10 years to come up with regulations.
Right.
We can actually come up with them on January the 1st, which we have.
Mm-hmm. Offering caps. Caps on offerings.
My view is, again, I think it's based on the investor to decide. As long as the disclosures are in there, it will be the investor to say, that's a ridiculous amount of money that this company is trying to raise. I'm not interested.
I still think we're going to head to a level with a cap or a soft cap perspective for sure.
No strong views, except I think it should be clear what the institution, the promoter, is going to do with funds raised over the amount trying to be raised.
Okay, you find me leaning here because there's meant to be a timer there, and now I've had the signal. So I wanted to end with perhaps one last statement from each of you in terms of advice regarding best practices for ICOs. So for all those people out there in the darkness who are either thinking of launching their ICO or participating as an advisor somehow or investing in one, what one piece of advice would you give to you?
If you can do your business without a token, and the sole reason you want to do it using a token is because you think you can raise funds more easily doing an ICO, don't do that.
Yeah. I would agree. I mean, I had somebody recently came to me, they wanted to launch a hairdressing salon using ICO, and I was like, that's not going to work. So again, if you have a real genuine business that needs a tokenized ecosystem, great. If not, be really careful. People will go to jail. We may have this conference in 1 year, 2 years, where people will go to jail on these things. There's a lot of fraud on this, so really have to make sure you're doing it properly.
Make sure you go to a jurisdiction that has certainty and surety and good governance. And on that note, thank you very much, and you can call me.
Great, well, thank you also very much.
Great, thank you. Excellent.
All right, thank you very much to our panel. Thank you, Brian Tang, for taking control here. You did a great job. Nick Cowan, all the way from the Gibraltar Stock Exchange. Reuben Grinberg, all the way from New York City. Henri Arslanian, c'est toujours un plaisir, mon ami.
Good.
OK, bon.